Okay, let's move on to the US data points to keep an eye on today. The big number.
Yeah, all roads lead to the non-farm payrolls and associated data. So yeah, 1:30. So soon after we come off air here, we're looking for. Remember, the non-farm payrolls is new jobs created. So we're looking for a figure of 220,000 new jobs versus 126,000 in March. March, of course, was a bit of a shock.
Yeah.
It was such a low number. Unemployment expected to fall marginally to 5.4% versus the 5.5% read in March. And then average hourly earnings, one I like to keep an eye on because obviously inflation is an issue, or a lack of it in the US, and so wage growth is important. But again, we're not looking for a very exciting figure, just a 0.2% gain versus 0.3% in March. And then hours worked, the average working week, again, is perhaps a sign of demand and productivity. Again, no change here. We're looking for 34.5 hours versus 34.5 hours in April. So a deviation from any of these numbers will obviously have an impact. Obviously, another poor number could be detrimental to the dollar. So that's not what.
Well, it's all about interest rates, isn't it?
It is.
All eyes to this number to see the impact for the Feds.
Absolutely, but of course we could well find ourselves in a situation where if we do get a weak number, it's still perceived as good news because people will think that rates can remain lower for longer, which is what the market seems to like at the moment.
Understood.